Gold and silver start to turn higher and start to make higher highs, higher lows. I mean, we're going to see gold go to about 8,800. We're going to see silver go to 175. If they start to break down, I mean, we're going to see $40 silver and probably $3,600 gold. And until it gives us a direction, there's no point in, I don't want to throw money in the market here because it's really just a coin toss, right? I want to let the train start moving and then jump on it when I know it's going in the direction I want.
If you look at gold over the last 3 to 4 weeks, it's almost done nothing. If I throw on my 50 moving average and the 200 moving average, look, it's literally getting sandwiched between those two moving averages. And so as a trader, I'm looking at this and I'm saying, okay, which way does it break? Does it break the 200 to the downside? Because if it does, it's going down to 36 to 3,500. If it breaks the upside, you have a chance to break out above 4,800 and maybe retest the highs. Now, please keep in mind, my long-term gold projections are much, much higher.
The precious metals market is entering a critical phase as investors watch gold, silver, inflation, interest rates, and global economic uncertainty. After a powerful rally, both gold and silver are consolidating, leaving many investors wondering whether the next major move will be higher or whether a deeper correction is still ahead. Market volatility, central bank policies, and growing concerns about debt continue to keep precious metals in the spotlight. Chris Vermeulen, a well-known technical analyst, and Gareth Soloway, a respected market strategist, explain why this current pause could be one of the most important moments for gold and silver investors. According to their analysis, the metals are trading within key technical zones that could determine the direction of the next major trend. If bullish momentum returns and key resistance levels are broken, gold could eventually move toward $8,800, while silver could target $175 per ounce. However, they also warn that markets rarely move in a straight line, and that a corrective phase could still occur before the next long-term advance begins. The discussion highlights the importance of patience and risk management. Rather than chasing every price move, experienced traders are waiting for confirmation before committing significant capital. With economic uncertainty continuing to grow, the precious metals sector remains one of the most closely watched areas of the financial markets as investors prepare for what could be a historic move in gold and silver prices. We're about to dive into highlights from their interview. Before we begin, make sure to subscribe to the channel and enable notifications so you never miss our latest insights on gold, silver, the economy, and financial markets. Thank you and enjoy the video.
So this is the weekly chart.
Yeah.
I'll just go back to the daily. So when something has mixed signals, you really just have to let the asset mature, let it work itself out. Time will kind of work that out. So when we look at this, we got the green moving average. That's the 150-day moving average, which, most people use the 200-day. I like the 150. It's sloping up. So it has long-term, the trend is going up. Short-term, though, the trend is actually more so coming down or trading relatively flat. So, when you zoom out on the chart, you could say, hey, this is a huge bull flag. Next move, next stop for silver, technically, based on this chart, is actually $175 per ounce. So there's a lot of potential. If silver hooks up and gets traction here over the next couple weeks or months, as long as it doesn't break this low, silver next target is 175. So that's really exciting. The short-term chart points to kind of a bit of a dramatic opposite direction, which is actually all the way down to about 40. It actually is $39 per ounce is the next wave down, which would be, to me, would be a final.
Why?
Yeah. So if we take a look,
how'd you come up with 40?
Sure. Yeah. Fibonacci extension gives us this. So we have this initial ride down.
Yeah.
And then we had the bounce. And then we just carry this forward. And so the way Fibonacci works, I only use two levels. I use the 618 extension, which is the golden ratio, and I use the 100% measured move. So based on this drop, and then based on the reaction bounce, the way this particular setup works and how I teach it and use it is, usually you're going to come down, and if you hit the 618 and you take a pause, you almost always come down and hit the 100% measured move. And so that is the downward momentum is pointing to $40 per ounce, which will obviously cleanse the market. A lot of people will bail out.
Cleanse more than that, let me tell you.
Yeah. And so that's what the downside. But I mean, we can go and look at the upside for silver, depending on how far we want to go back.
Hold on. Let me stop you again.
Sure.
Because I remember on the way up, we were always talking about that 618 line, and it'd be like, well, if it gets through there, it's going to make that 100% measure move. And you were repeatedly correct.
Yeah.
Like, well, this now signals this level. Now this, and bang, bang, bang. And it worked almost every time. So that 618 to me looks like it's right there at the early February and mid-March lows. Is that about right?
Yeah. Yeah.
So would that be, we start taking those out and trading down, to 60. That's when it's like, oh, okay, here comes 40.
Yeah. Yeah.
Okay.
And I mean, this isn't what you want to hear, or most people, but I think this is an amazing opportunity. Like, I mean, keep in mind, I did sell my silver at 111. I sold my gold at like 5,100. I mean, I do want metals to fall because I want to pick it up at one of these reactionary measured move lows. And I think this is only a temporary, if you're a long-term gold investor, who gives a hoot? Like, this is the best thing that could happen, because if we hit our Fibonacci targets on the way up and then it falls and creates a retracement pullback, this is like this is an A, B, C correction within a huge super cycle in gold. This level here is a measured move. If it gets back down here, this is like back the truck up and pick up a ton of physical metals, because this should go higher for probably the next 10 years after that, right? And so that's the way I see it. My only concern is we see metals trade sideways for several years. For some reason, it just doesn't get traction. And I just don't want my money stuck in a metal that's costing money to store versus something generating dividends and returns and interest and all that stuff. So I think this is a great opportunity. I think if you're a long-term investor, you just turn a blind eye like you always do, right? If you do the buy and hold, you turn a blind eye, let this thing do what it's going to do. You still have faith. I mean, silver's had a big correction, but it still doesn't change the underlying story for metals. I mean, the story for metals is they should keep going higher and take off and become the dominant, currency, I think, right? So there's still good stuff. I think just short-term wise, we just need to be aware that, hey, there could be a flush down, which is actually just an opportunity. It's like to add more, because I think it'll rebound and take off for a long time after that.
So Chris, that 618 level, for people to watch, what do we want to call that? 63, 65, something like that?
Yeah. 62 or 60 area. It's just an area, right? There's no precision numbers.
A major theme throughout the discussion is the conflict between short-term weakness and long-term strength. Technical indicators suggest that gold and silver remain in broader bullish trends, but near-term price action has become mixed. This creates uncertainty for traders while simultaneously creating an opportunity for long-term investors. Silver, in particular, is drawing significant attention. The bullish scenario points toward a powerful breakout that could eventually drive prices toward $175 per ounce. At the same time, analysts acknowledge the possibility of a much deeper correction if key support levels fail. Such a decline would likely shake out speculative investors before establishing a stronger foundation for the next major rally. The focus remains on price confirmation rather than prediction. Investors are being encouraged to let the market reveal its direction before making aggressive moves. In highly volatile markets, preserving capital and waiting for clear signals often proves more valuable than trying to anticipate every short-term swing. Let's get back to the interview.
So gold has a slightly different chart pattern. Silver initially had the Fibonacci drawn from this drop and the bounce, which actually we had done. Once we saw this bounce take place, we actually have that move, and it tells us where price was supposed to go. So we did see gold complete its first move. It sold all the way off. It then had the bounce, and then it came all the way down to this 100% measured move. And of course, it pierced through it because these aren't specific levels. It's just a zone.
Yeah,
so gold hit that move. But now it has, because it's hit that move and it's had a bounce, we can now actually redraw the more current price action. So if we were to take a look at where gold is, the new move is actually this high based on this sell-off and then this bounce. And we'll just drag that forward, and it tells us where gold should roughly go. And it's saying gold should drop to about 4,100 and then potentially plummet down to about 3,600. Both of these prices, for this price for gold at 3,600 and that $40 gold or price for silver, are both like in the same spot. Both metals had paused.
Yeah.
And it's right where they started these parabolic moves. And so the parabolic moves, the way the market is very efficient. What it does is once we get into a parabolic move, like in Micron, where everybody's just piling in, if there's easy money to be made, if you make a lot of money fast, you better be aware because it can get taken away very quickly. The market loves to punish people who chase money, who are just going for pure returns or pure excitement, whatever the reasons are. It's usually a blend of both. And so both of these charts are saying, hey, if you got in late and you just bought near these highs and when it was screaming higher, we're going to put you under some pressure. We're going to see if we can break you and get you out of this asset before we stabilize and start the next run up. And so that's what is happening here. Everybody who got in late is now getting put to the test. And they're going to realize, oh man, I bought high, and they're going to eventually panic and sell out low.
If you look at gold over the last 3 to 4 weeks, it's almost done nothing. If I throw on my 50 moving average and the 200 moving average, look, it's literally getting sandwiched between those two moving averages. And so as a trader, I'm looking at this and I'm saying, okay, which way does it break? Does it break the 200 to the downside? Because if it does, it's going down to 36 to 3,500. If it breaks the upside, you have a chance to break out above 4,800 and maybe retest the highs. Now, please keep in mind, my long-term gold projections are much, much higher. But I still think there's one more big flush out on gold that has to weed out all the weak hands that bought back in, December, January of this year when they thought it was easy money. All right, gold is not easy money. It's a store of value, and it's being treated more like a risk asset at this point, and that has to be flushed out. So those investors probably have to be flushed out by some sort of downside flush. I'm looking at a $3,500, $3,600 price target before I start stepping in for long-term holdings.
Okay, long-term around 35, 36. Where would you put the long-term outlook of gold in 2030? 3 years away.
I think you're north of 10,000 again, and again it's always hard to project out that far in the future. But I do think that listen, we've seen and this is the same for Bitcoin, right? There's been no fiscal responsibility in the government. It's just more of the same. Everything that was promised is not being delivered on in terms of spending cuts. We're back in wars that are costing us money. How do you look and say, let me not have any gold in my portfolio or even Bitcoin if you're a Bitcoin believer? You have to have a little exposure there just to be safe, really. It's my insurance policy. It's how I sleep better at night.
The bigger picture remains centered on the long-term outlook for precious metals. Despite the possibility of temporary corrections, the broader trend continues to favor gold and silver as global debt levels expand, currencies face pressure, and investors search for stores of value outside the traditional financial system. These macroeconomic forces continue to support the long-term bullish case for precious metals. One of the most important takeaways is that market pullbacks should not automatically be viewed as failures of the bull market. In many cases, corrections serve to remove excessive speculation and create stronger foundations for future advances. This perspective helps investors focus on the larger trend rather than becoming distracted by short-term volatility. If gold and silver successfully resume their uptrends, the upside projections discussed could become realistic targets over time. If prices decline first, many long-term investors may view those lower levels as opportunities to accumulate additional physical metal. Either way, the precious metals market appears to be entering a decisive stage that could shape investment trends for years to come. For investors following gold price predictions, silver price forecasts, inflation trends, Federal Reserve policy, and precious metals investing, the coming months may prove extremely important. We'd love to hear your perspective on the ideas shared in this interview. Leave a comment below and join the conversation. If you enjoyed this video and found value in the analysis, please like, subscribe, and click the notification bell to stay updated with future content. Thank you for watching, and we'll see you in the next video.